Mortgage versus rent. Making the best decision for your financial future. Deciding whether to mortgage a home or rent a home, apartment is a significant financial decision that depends on various factors, including your financial goals, lifestyle, and long-term plans. This article explains the basics of calculating the costs and benefits of both options and provides guidance for new investors, experienced investors, investors trying to retire early, and investors near retirement. Basics of mortgaging a home. Costs. Down payment. Typically 3 to 20% of the home's purchase price. Monthly mortgage payments. Includes principal, interest, property taxes, and homeowner's insurance, PITI. Maintenance and repairs. Homeowners are responsible for all upkeep and repairs. Closing costs. Fees for loan processing, appraisal, and other administrative expenses. Benefits. Equity building. As you pay off your mortgage, you build equity in your home. Appreciation. Property values may increase over time, potentially leading to a profit when you sell. Tax benefits. Mortgage interest and property taxes may be deductible on your tax return. Basics of renting a home, apartment. Costs. Monthly rent payments. Fixed amount paid to the landlord, typically on a monthly basis. Security deposit. Usually 1 to 2 months rent, refundable if the property is left in good condition. Utilities. Depending on the lease, some utilities may be included in the rent, while others are paid separately. Benefits. Flexibility. Easier to move without the burden of selling a property. Lower initial costs. No need for a down payment or closing costs. Maintenance free. Landlords are typically responsible for repairs and maintenance. Guidance for different types of investors. 1. New investors' considerations. Stability. If you're planning to stay in one place for several years, buying a home might be a good investment. Savings. Ensure you have enough savings for a down payment and emergency expenses. Renting. Offers flexibility, which can be beneficial if you're still uncertain about your long-term plans. Advice. Rent. If you're early in your career or unsure about your future location, renting can provide the flexibility you need. Buy. If you have a stable job, enough savings for a down payment, and plan to stay in one place, consider buying to start building equity. 2. Experienced investors' considerations. Diversification. Owning a home can be part of a diversified investment portfolio. Market conditions. Consider local real estate market trends and economic conditions. Advice. Rent. If the real estate market is overheated or you anticipate significant price drops, renting may be a prudent choice. Buy. If you identify a good deal in a stable or growing market, buying can be a strong investment to diversify your portfolio. 3. Investors trying to retire early, FIRE. Considerations. Cash flow. Renting can free up capital for other investments that generate passive income. Equity growth. Homeownership can provide a hedge against inflation and potential appreciation. Advice. Rent. If renting allows you to invest more aggressively and generate higher returns elsewhere, it may align better with your early retirement goals. Buy. If you're looking for stability and a hedge against inflation, buying can be a part of your strategy, especially if you plan to stay in one location for a long time. 4. Investors near retirement considerations. Stability. Owning a home provides stability and can be part of your retirement plan. Liquid assets. Renting can keep more assets liquid, which might be necessary for medical or unexpected expenses. Advice. Rent. If you prefer the flexibility and lower maintenance responsibilities, renting can be a good option. Buy. If you value stability and want to leave a tangible asset to heirs, buying might be the better choice. Calculating the costs and benefits. Mortgage calculation. Monthly payment. Use a mortgage calculator to determine PITI based on home price, interest rate, loan term, and down payment. Total cost over time. Include maintenance, repairs, property taxes, and insurance. Rent calculation. Monthly rent. Consider the current rent and potential increases. Total cost over time. Include utilities and renter's insurance. Comparison. Break-even point. Calculate the number of years until the total costs of buying equal the total costs of renting. Equity versus flexibility. Weigh the benefits of building equity and potential appreciation against the flexibility and lower initial costs of renting. Conclusion. Choosing between mortgaging a home and renting depends on your financial situation, goals, and lifestyle. By understanding the costs and benefits of each option and considering your stage as an investor, you can make an informed decision that aligns with your long-term financial strategy. Whether you're a new investor, experienced investor, planning for early retirement, or nearing retirement, evaluating your priorities and financial goals will help you determine the best path forward.